Shares of Desktop Metal have surged over the last couple months as the SPAC turned now 3D printer that's out buying other companies has caught investors' attention. Ric Fulop is joining us, founder and CEO of the company. Ric, great to have you on the show. Appreciate you joining us this afternoon. I want to first talk about the $300 million deal that was just announced at the end of this week with EnvisionTEC. When I was reading about Desktop Metal, and as we've talked about it here, I've thought about it as a fairly specific 3D printing process, but now it looks like you're also going for scale. So walk our viewers through what exactly the company's going to look like now after this deal.
Yeah, I mean, thank you very much for having us. Desktop Metal makes the world's fastest metal 3D printers. They're able to produce parts 100 times faster than legacy technologies, 1/20th the cost. And that technology has really caught the eye of mass production manufacturing customers in the industrial world. But it's primarily focused on metal. And when we went public, we were able to raise a lot of capital with the idea that we would continue to grow our business organically, but also look at inorganic opportunities in the materials, print platform, and specialty parts businesses. And we found a fantastic company that we're super excited about in EnvisionTEC. They're the original inventor of area-wide DLP printing. This deal is about two things. The first one is an incredible portfolio that actually grew double digits during the pandemic, and a company that had 30% EBITDA margins during that period, which is incredible. And then in a year where most of the other companies in the space had difficulty. And then in addition to that, they have an incredible blocking IP portfolio on area-wide photopolymer printing, which is really the large market in polymer additive manufacturing for production. Photopolymer printing always had the surface finish. EnvisionTEC with their DLP technology gave it the speed, and then more recently, over the last year and a half or so, the ability to have multi-cure resins gives you the material properties so that you can all of a sudden go to market with printing at scale and at high speed. And it's a combination of those things that we got really excited about. Mm-hmm. They have over 190 materials qualified for their systems in major applications with some of the largest companies in the world in the jewelry space, in the audiology space, medical device space, as well as dental. They are one of the leaders in dental with, combined amongst the different markets, over 5,000 customers. So it's a fantastic portfolio of both products and intellectual property.
Now, do you have right now specific plans on whether or not you're going to keep the entire process that they have? Are there synergies within it? It sounds like this is really a way to get into new markets as opposed to taking what you already have and scaling up. I mean, that's part of it, but it sounds like you're thinking about new clients here. You're thinking about different industries that wouldn't have otherwise been with Desktop Metal.
Yeah, we would take our go-to-market from about 80 partners in 60 countries that distribute our products to about 200 in 68 countries. So it's almost doubling of our distribution capability, adding vertical channels in jewelry and in dental that are in medical that are very, very strong. They have the strongest dental channel in the market globally. And in addition to that, there is a really, really strong material portfolio. So very strong, high-margin recurring revenue. And that is a part of our story is we're focused on what we call additive 2.0, which is the ability to have mass production of parts with additive at a lower cost than analog processes. So give a digital process that's less expensive than an analog process. And this is on the context of a market that has undergone more than 20% compounding over the past decade, and it's projected to continue to compound this decade and go from $12 billion to $146 billion. So it's a very high growth market.
Ric, in terms of the growth right now, there's a lot of excitement about a lot of different technologies right now. The shares of your company since going public here have exploded higher, like a lot of other secular growth markets. 3D printing has a little bit more history than some of these other ones, though, where there's been a lot of excitement about 3D printing in the past that has not lived up to the expectations. What's different this time around in this 3D printing boom? I mean, are we going to start seeing major top-line growth?
Yeah. In the, all markets see this in their first wave. We had a first wave of the internet where, instead of Google, you had InfoSeek and Lycos and a few other companies that don't exist anymore. Same thing happened in things like Webvan, and then today we've got DoorDash. So in the 3D printing space, when you had the first hype cycle, the entire market was less than $1 billion. So it was a very small market, and the technology could only do prototyping and tooling at that time. It's evolved and continued to compound in the last decade plus, and today what's different is that it's at an inflection point, and pretty much all the product that's mass produced with EnvisionTEC machines goes to mass production of end-use parts. Over 10 million parts printed last year. And so they have the same philosophy as us. We're focused on end-use part mass production. So putting products that end up in consumers' hands. And when you look at a program, 95% of the spend is in the actual parts and spare parts versus the tooling and the prototyping. The tooling and the prototyping is a tiny fraction of the spend in a program. So this is a very long arc. Today, less than 0.1% of parts are printed. Almost everything is made analog with tooling. And different forecasters project that by the end of the decade, we'll have 1% penetration. We'll be at around 150 billion. That's what we expect as well. So we could see a 20, 30-year run here. So it's a great, I do believe that in my lifetime, we're going to see double-digit penetration of additive in production.
So the idea here is there's still a lot of stuff being done very inefficiently in the analog way, doing things by hand, doing things slowly. The question is for these companies...
Even automated, but with tooling, where you're basically locked into an unflexible design, and 3D printing liberates you, and you can change your design as much as you need, and you can do shapes that are more sophisticated. You don't have to ship products around the world and pay tariffs. You just send a digital file and print it locally, customized for that environment. So there's many advantages for this technology, primarily the environmental advantages of lightweighting and making things more efficient.
Rick, in terms of the shareholders that have been piling into the stock, as you start to give and have more transparency and give reports as a public company, can you give me an idea if you have priority for profitability, a timeline? Is that something that's on your mind right now?
Yeah, I think we're not planning to change guidance right now, but we probably will adjust it when we do the next quarterly earnings, since business is going well, and we're very excited about the way that things are shaping up.
Okay. All right. Well, looking forward to getting updates along the way. Appreciate it, Rick. Thanks for joining us.
You got it. Thank you very much. Talk to you soon.
Thank you. Ric Fulop is the founder and CEO of Desktop Metal.